Welcome back. You're watching Lunch Money. Just before I head across to the management of Raymond, just pull up the markets for you, heading towards 8,300 on the Nifty. 8294, that's the high for Nifty in 2016. It hit that on June 7, so we're very close to that. Of course, on the day of expiry, we wait to see if markets can scale that level and possibly reclaim 8,300 before we close for trade. 8288 is where the Nifty is at right now, heading towards the 8,300 mark in trade. Let's also connect with Mohit Dhanjal, Director of Retail at Raymond, understand his perspective on how he's reading the twin consumption boost that's come in. Good afternoon, Mohit. Thank you for joining us on the show today. Shops now allowed to remain open 24/7. How big an opportunity is this for you, and will you be looking to capitalize on it?
Yes, I think it is a very progressive legislature, and as we know, it's a model act which the states are free to adopt, reject, or modify. So we are hopeful that all the states will actually adopt this, because what this does is it actually makes it convenient for consumers to shop where they want, when they want, and how they would like to shop. And we as service providers, I'm sure we will build our models to cater to that demand. So it's a very positive legislature.
Of course, this would also come with an additional cost burden. Do you think the kind of incremental benefits that you're likely to see will be limited by this higher overhead cost, whether it's in terms of people or power or running those assets 24/7?
What typically would happen is that it's not that all your markets and all your stores would start working 24/7. So you would define and identify your type of formats that you would like to now open them, let's say 24/7. Even today, if you look at our major markets, our stores work 7 days a week. And however, in our present situation, we need to take special permissions and licenses. So the whole operational issues of actually getting these licenses in place will be removed. So it makes it easier to stay open 7 days a week. In terms of working 24 hours a day, I think there would be various variations on that. So how I see this happening is a few stores which are, let's say, in high transit locations, maybe at airports or closer to airports or railway stations, bus stations, which have a huge density of footfall in off working hours, would perhaps be the first ones to actually adapt to this new market situation. I also see some catchment markets as well as some malls using this as a USP to attract consumers. So let's just look at a suburb in Bombay, Mindspace in Malad. Now Mindspace as an office space has over close to 50,000 people who work 24/7. Now you could have a shopping center around that place that is actually operational 24/7 too, and that's how we will look at it. So it's not that all our stores will start working around the clock, but definitely stores where it makes sense, we will do it. And the cost model is it depends on the demand. End of the day, I'm a retailer. If I see a opportunity, I'll go for it, and I need to build a model that will get the maximum out of it.
Fair point. The other big thing, of course, for businesses like yours is the competition from the e-commerce space. Of course, Raymond has been marking up its presence over there. Just tell us what's the kind of business that is coming in from the online channel now? What are the plans on that going forward?
At Raymond, we actually don't see online as competition. So today, if you look at the categories that we are in, we actually see online helping us expand consumption and grow the categories. So we are not in a situation where it is a saturated market. Definitely not. Especially for a country like India, where we have a huge population that is actually sitting at the barrier of consumption and waiting for the right trigger to start consuming in larger volumes. Actually, online gives you, or let's say gives you a reach that you can reach out to consumers in maybe in locations which were not reachable, or in pockets where you didn't have enough consumers to set up a brick and mortar store. So I look at online as an opportunity to expand categories and grow the market. So it's not competition. From Raymond's point of view, what we believe strongly is that if a consumer wants to shop at home, she should be free to shop at home. She should have the tools and the convenience to be able to shop at her convenience. And if that means in the middle of the night when you're at home or when you're traveling from work to home, be it. And as a brand, as a category leader, I need to have my products available in those channels which are convenient to us. So that's how we are looking at it. We are not looking at online as a discount channel. We look at as a great opportunity to expand our reach, to be there for consumers when she wants us.
Absolutely. So just to get some perspective on this, as a percentage of your sales, how much would you say is coming from the online channel right now? Would you have a breakup on that?
So as of now, it's a very small number. It is in single digits, and that is as per our strategy, because we are not looking at this channel as a revenue grower for us. It is more on the convenience space. So even if I look at the overall online market vis-a-vis the brick and mortar sales in India, it's still a nascent stage. It's less than 5%. So we don't see anything greater than that.
Right, Mohit, just hang on for a minute. Markets have just hit a fresh 2016 high. The Nifty at 82.95 right now, just 5 points away from that 8300 mark. The last time the Nifty was at this level was on June 7th, before the Brexit volatility came in. So you'd have to say that markets have recovered very smartly post that Brexit event and are continuing to surge ahead in trade. 8300 is the next level that we have to cross. Awaits to be seen whether we can expire above that. Today it's the end of the June series as well for the markets, but 82.95, a fresh 2016 high on the markets right now. Jay Bala joining us on the phone line. Jay, you'd really have to say that Brexit or no Brexit, Indian markets have held firm. Fresh 2016 high over there. What are the kind of levels that we should be working with right now?
Yeah, we've been saying for the last few weeks that the markets are headed in a trending fashion to the higher zones, and we are looking at 8600 to 8700 to come in the short to medium term. So within probably the next 3 to 4 months, that's a price objective we are projecting. And we've also been saying since March that the Nifty is headed for record highs. I think once it gets there to 8600, 8700, that will also become obvious. So, the market is bullish, and we said any look for the markets during the so-called Brexit crisis is a buying opportunity, and the market is behaving exactly the same way.
Jay, if you just disregard the global cues for a minute, with the kind of incremental positive news flow that you've seen for the Indian markets over the last 3 weeks, whether it was opening up FDI for a few sectors, the new textile policy, the 7th pay commission report coming in, shops allowed to remain open 24/7, do you think markets have entered into a fresh territory right now? You're going to see higher tops, higher bottoms going forward, and beyond that 8700 mark, do you think 9000, possibly 9500 is also on the cards over a 6 to 12 month time period?
Yeah, that's exactly my projection since March, and I've said on Bloomberg and other channels that the price objective for the Nifty from a 45 to 60 weeks perspective is 9660. So record highs are very likely, highly likely, and you should focus on key sectors that's going to lead the market to those levels. And we have little doubt, there's no surety in the market, so we're just being a bit cautious for the sake of being cautious, but we are quite confident that the market will go for record highs.
Which sectors do you believe will lead this up move going forward?
Yeah, it's going to be FMCG, banks, and selective stocks in the cement space. So, FMCG, I've always been bullish on Hindustan Unilever. We're going to see record highs for the stock to come through. We are looking at something in the region of 1050 to 1200. And I've also been saying that once the these sectors in the banking space and FMCG take lead, they'll put the market on a higher orbit. Once that is done, Reliance is going to take lead. Post that, until that, Reliance is going to be choppy. But this level at which Reliance is at this point of time, it's providing opportunity to accumulate at lower levels. Once it crosses 1100, there'll be no looking back for the stock. So watch out for banks and FMCG in the short time frame. But once the market is in a higher orbit, look for Reliance.
What about the IT space? You could say that it's a currency concern. You could also say that there's a currency opportunity over there. What happens to IT now?
Yeah, IT is in a spot of unattractiveness. I should say that except for Reliance, except for Infosys and HCL Tech. I think I don't see too many stocks that are encouraging the IT space. Probably it's probably going to be a slightly underperformer for the next couple of months. But I think if you have to be positioning yourself positively, it has to be on Infosys and HCL Tech rather than other stocks in the space. It's not going to go down when the market is going up, but obviously you want to look at stocks that outperform and deliver better returns than others in the space.
Last question, Jay, any call on a Tata Motors or any of these other auto names? There's always divergent news flow on Tata Motors, CLSA upping its target while BofA ML downgraded the target a couple of weeks back. It's amongst the top gainers on the Nifty today. What's your call on it?
Yeah, I was positive on Tata Motors when it was in much lower levels, and currently it's still trending up. You could even see highs closer to 550, 600. I'm positive on the stock, but the attractiveness from a risk-reward perspective is slightly lower. So other than that, I'm positive on Tata Motors. But if you look at winner within the space, I think it's Maruti all the way. Looking at 5,100, 5,200, and I think that's an easy task for the stock. So I would rather look at Maruti than Tata Motors.
Fair point, Jay. We'll leave it at that. Thank you for speaking to us today. That's the view from Jay Bala. Just pull up the Nifty again for you at 82.92 right now. So possibly 8300 could be a tough resistance to crack, but nevertheless hitting a fresh high for 2016 on the Nifty. Completely disregarding all the volatility that you've seen post that Brexit event, up by about 1% in trade right now. Let me just bring back Mohit Dhanjal from Raymond. Mohit, apologies for keeping you waiting over there. A fresh high for the markets coming in. Of course, Raymond as a company has been performing very well for the last 3 years. You've now also diversified into the FMCG space. Just take us through the strategy over there. What's the kind of value addition that you'll get from this business?
At Raymond we see an opportunity to leverage our brands and our portfolio. So therefore what we do in our FMCG space is in that part of the strategy. I'm not the right person to comment on that, so actually I would reserve my comments largely to retail and that landscape.
Fair point, Mohit. So just before we let you go, what are the kind of product addition plans as far as your bread and butter business goes? Where do you see more traction coming in? You also have a strong presence in the premium space. What's the outlook on Raymond going forward? What can we expect for FY17?
So as part of our strategy, what we are working on is innovation for our core business. So we would be coming out with innovative products. The recent one that we launched was TechnoSmart fabric, and this fabric provided 4 different benefits to consumers. So from a consumer's point of view, it was something that was not in the market. There was a need for it, and we did that. We launched this product in the month of February, and it was on most of the channels through our TVCs in the month of March. We have seen a very good response to this product. It has done extremely well. We are now expanding this range, and we would see a lot more action in this space. Similarly, it is our plan to actually lead fabric innovation, as we are the market leaders in this space, and we'll continue to come out with products that consumers need and want, and which are innovative. We will use technology. We have our own in-house factories where we use the best of the equipment that is required to manufacture. So we will leverage those assets to come out with products that are exemplary. Apart from that, we also are looking at categories which perhaps do not have sufficient let's say investment. So a category which was always present, but we adopted and we have now taken it to a next level is linen. We have also used that was last year, and we have continued to do that. So we see a lot of action in that category as well. Going forward, we would see a lot of these fabrics be converted into our specialized brands. So we have a range of products that we would soon launch under our Raymond ready to wear, and so there's a lot of exciting stuff happening. So I think these are exciting times, and consumers can really look forward to a lot of good stuff.
Fair point, Mohit. We'll leave it at that. Really appreciate you joining us on Lunch Money today and taking us through what the new developments mean for Raymond, as also the business outlook for the company going forward. Thank you for speaking with us. Let me also bring in Amit Harchekar, talk about the markets. Amit, fresh